This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good Monday afternoon, traders, and welcome back. I'm Scott Norst with today's Forex report. Today is December 4th, 2006. It was a quiet opening this week, comparatively speaking, as we have come from 2 consecutive weeks of incredible dollar weakness. Of course, such strong running ultimately leads to a lack of breath, and the market is now using a light economic calendar to take a short break. Today's only U.S. report was pending home sales for October, which is not necessarily a key report. Having already seen the latest numbers for new and existing home sales, this number is easier for the dollar to shrug off. Nevertheless, the data was disappointing as contracts to purchase existing homes declined by 1.7% versus the 0.5% expected. This reiterates the weakness seen in home sales and indicates that prices will need to fall further to spark buying and help shrink inventories. The initial reaction in the majors was limited to a little increase in volatility, and it was not until 30 minutes later that the dollar began to give back overnight gains. When all was said and done, most pairs had done almost nothing in today's session. The dollar is still very heavily oversold against most other currencies on daily and even weekly charts. This leaves the door open to a little pop in the dollar in coming sessions as we await employment data at the end of the week. The dismal U.S. data seen in recent months has now been priced into the buck, and most traders are waiting for more ammunition before loading the boat with more dollar shorts. Therefore, a small rebound on the back of profit-taking should not surprise traders. However, we still believe there is great potential for further declines in the greenback, especially if this week's top reports disappoint. This includes the employment data as well as ISM non-manufacturing, which is due tomorrow. In the meantime, Australia's current account balance is due tonight, followed by Eurozone and UK PMI services tomorrow morning. Till then, have a great night trading. Take care.